Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, July 13th. Taking a quick look at futures. We got oil up 0.6. Copper's down 0.5%. Precious metals are flat. ES is flat. Small caps are down 0.2%. Nasdaq's up 0.3, so that looks good. Over on the macro front today, we got a big CPI print at 8:30. That has the potential to move markets. Does it come in, super hot? Does it come in subdued? Is it right around expectations? Is it a soft print, which would give Jay Powell and the FOMC more cover? That everything's transitory, that whole narrative. I'm not going to get into that. But at 8:30, look for that CPI print. And we may see markets kind of in a state of suspended animation, pre-market, waiting for that print. We've got a 30-year bond auction this afternoon, which is always interesting to watch. And we are waiting on JP Morgan, Goldman Sachs, and PepsiCo here this morning as earnings season begins to kick off. Now, before we get too far along, you're always welcome to run the tape at 1.25x, make it a little bit more efficient for you. You can always pause it. And also, if you're new here, go ahead and hit the subscribe button and the alarm bell. You get all my content. I think if you stick through the presentation this morning, you will get a lot of objective information that you can use in both your active trading and your swing trading, specifically on the indexes and FATMAAN names. And then if you go over in the show notes, you can register for all my content, and that way you'll get individual trade ideas, trade recaps, and follow along with new trade ideas as I send them out. So I encourage you to do that, and I will certainly welcome you to the team. And of course, longtime listeners, make yourself feel good. Do me a favor. Help me spread the word. I've got a couple of guys out there on the team that are really working hard to help me build my audience by retweeting and posting links in Facebook and that. And if you do the same, I'd really, really appreciate that. So let's get into it here. Not a lot to report, but we'll go through it anyways. I want to back out to the daily charts and show you SPY. We've got this nice rising channel here. And what I've done here this morning, I want to give you a little bull market checklist. And if you're already a member, I'm gonna email you this morning, so you don't have to take big notes. But whenever the market is rising, there's always a drumbeat of that there's going to be a rug pull right around the corner, and the bubble's not sustainable, all that kind of stuff. And I think it's always good to boil it down to a little bit of a checklist, so you can separate being scared under your desk versus being long. And there's a big divide between that. I mean, if you're scared, it's hard to be long. And if you're long, there are times when you need to be scared because things are changing. So let's go through that. What's the number one question you can ask? Are we at an all-time high? All-time highs are bullish, not bearish. Are we at an all-time high? Yes, we are. Is price above the 8 and 20-day exponential moving average? We have the 8-day in pink, and we've got the 20-day in navy. Yes, price is above the 8 and the 20. Hard to get bearish when you're above the fast-moving averages. Are the EMAs, the moving averages, bullishly stacked? What do I mean by that? Is the 8 above the 20? Is the 20 above the 50? And is the 50 above the 200? Yes. Hard to get too bullish when all the moving averages are above one another. Check mark for the bulls. What is the slope of the moving averages? Is it positive? Is it flat? Or is it negative? Well, we can see here that all the moving averages have curled up. From the 200 to the 50 to the 20 to the 8, they are all moving north. They're moving higher. That's positive slope. That's bullish. So another check mark for the bulls. Next question, have any trend lines been violated? Well, we see here we are in a rising channel. We just had an excursion a couple of weeks ago. That would have been a cautionary point. Why? Because price dropped below the 8 and the 20, and it dropped out of the channel and came down for a tag of the 50. That's cautionary. Why? Because our criteria, some of the criteria that we look for were violated. Price dropped down below the 8 and the 20. It dropped out of the channel. That's a time that you need to sit up and pay attention if you're long. Now, it turns out that that dip was bought. So now we're back in the channel. We're back above all the moving averages. All the moving averages are positively sloped. That's bullish. Where are the indicators? We've talked about it before. RSI is bullish in its bullish regime above 50. Is RSI above 50? Yes, it is. Where is momentum? Momentum is bullish when it's above the 0 line. Where are we? We've been bullish this whole time. Our PPO has not gone below the 0 line, going all the way back to November of last year. So we never got truly bearish on our momentum signal. So that's positive. And also, what is the slope of the indicators? Slope of the indicators is positive. Rising momentum, rising RSI. So as you go down the list, your confidence should be bolstered and your fears should subside. Because right on down the list, as we go through them, there's a lot more check marks for the bulls than there are the bears. Now, what are some bearish factors? We've got bearish divergence. Why? We're at an all-time high on price, but you can see momentum is lower and RSI is lower. That's a yellow flag. Why? Because you'd expect price, if it were at a high, you'd want to see a high in momentum and you'd want to see a high in RSI. We don't have that. That's cautionary. If you go and look at other indicators out there, yesterday we looked at breadth. Breadth stinks. We got less than 50% of stocks above their 50-day moving average. That's not good. That's a bearish yellow flag. Where is sentiment? Bullish sentiment is maxed out. That's contrary and bearish. Why? If everybody's bullish and long and there's no bears, that means there's no counterbalance to the market. And if they pull the rug, then there's not going to be anybody home to buy because everybody's already long. So that's a bearish factor. But when you look at the bearish factors, they're all secondary. They're all second order factors. Bearish divergence is a second order factor. It doesn't tell you what price is doing. It tells you what momentum and RSI are doing. Sentiment is a second order factor. Why? Because sentiment can be overdone for months and months and months before there's a change. Breadth can improve. It can go from weak to strong as market rotation happens. Right now, the strength is focused in NASDAQ and the FATMAAN names. Luckily, we've been long a lot of them, but you'd like to see, some of the other parts of the market improve. But all that being said, we're in a bull market. So don't let anybody scare you under your desk or scare you to the sidelines until you can objectively go through that checklist and see when things have changed. So I will send you that list, and I hope that's helpful to you. So SPY, inside the trend, rising, still bullish. SPY 2-hour chart, I dropped on this little wedge. It's not massively important. We're high above this 2-hour channel. You don't want this rising wedge to break. Otherwise, you can come back here to 435 and back test this channel. Just be aware of that. But RSI and momentum are still strong. We're inside the 30-minute channel. I'd be watching this, 436, 436.25 area. For bad things to happen, first you got to have little things happen. And the first little thing that could happen is dropping out of a 30-minute channel. And for that to happen, you got to drop below 436 here. And then you would be open to come back into 434.50. Moving on to the Q daily. Again, go through that checklist. All-time highs, bullishly stacked, positive EMA slope, positive indicator profile. Even here, yeah, we got some bearish divergence, but looks like we've taken out, or at least at the same point of this high here, we're still on an upward trajectory. And then one of your first signs of potential trouble would be a break of this minor trend line, price coming down below the 8 and the 20, getting a bearish cross on PPO, and dropping below this trend line on RSI. You see all three of those happen, become defensive, especially if you've piled in long on the Qs. But until that happens, stay long. We've got all the FATMAAN names reporting at the end of the month. And I think that's going to be a bullish backdrop. Of course, Jay Powell could have a gaffe tomorrow and the whole thing change. But as we have it now, I think the backdrop remains bullish. QQQ 2-hour, we dropped out of the channel, but we were back up at the prior highs. I think today you can use that prior high, 362.25 as your pivot. We break to new highs. New highs you got to buy. So right here, if the pre-market were up, what did I say? Up 2 or 3 tenths. If we can pop that and hold it this morning and get Apple and some of these guys going, then we'll have a new level to shoot against. And if you are lucky enough or good enough to get long back here on this dip, then you can roll up your strikes and your stops. Make sure you get back to neutral, put all this money in the bank, and then you can stay long against 362. Here's a 30-minute chart, zoomed in, inside the lower half of the channel. Next objective is to break into the upper half where we can get a higher operating range here on price. And that would take us north of 363 and then look for, 365, 367 if all the stars align. IWM. Notice the setup here, totally different than QQQ and SPY. Why? Are we at an all-time high? No. Are all the EMAs bullishly stacked? No. Why? We got the 8-day below the 20. Yes, they're above the 50, which is positive, but there is no positive slope. We've got the 8-day and 20-day coming down. We've got the 50-day flat. So right there, that tells you neutral. Why? Because they're not bullishly stacked and they're not heading north. What's going on with the indicators? Losing momentum, losing RSI. So it's weak. We can see here on price, we've been in this big $23 wide consolidation since February. What we really need to see for this thing to get going big time is to get a breakout to all-time highs, and then we can put on a measured move of $23 onto 234, which was the prior high, and then that would put us, 234, 23, what is that, 257, and then the next leg of the bull market would be on if we got that breakout and push higher. But right now, we got to hold the 50, which is at just under 226, and look for a move back up to 234. Here it is zoomed in. We talked about this gold moving average, which is equivalent to the 50 on the daily. Yesterday, we struggled with that level and broke above. So now what I want to see is a move to 227.50, then a breakout there to 229. And that would be a pretty good result on IWM. But it's having some trouble. So I want to see if that can go up. I think you can stay long either against the 50 here at 225.79 or 225.50 here at lateral support. I am long. I think I'm long 226 calls for Friday. So we'll see how that goes. Hopefully we can get a push here. And here it is on the 30-minute chart. You can see a lot of the morning was spent wrestling with this level, which equates to the 50 that I just showed you on the daily, and we did break above. So hopefully now the 50 will act as support and we can get a push higher. Moving on to Facebook. We've been watching this thing and participating the whole way. The other day, last week, we dropped down below. We had this support level identified. If you were on top of your game and you wanted to get long Facebook, you could have done so right here at 344. Okay, you missed it. Where was your second buy? 348. Why? Because it broke back into a well-defined range. So that was your second buy. Recapture of a level from below. Okay, 348 was another buy. Oh crap, you missed that one too. Where's your next buy? Next buy is midpoint of the range, which was 352 yesterday. And if you were in the trading room, I pointed that out. Okay, you missed all this, but you still are thinking about Facebook. What do you do now? If you get a back test to 352, you can buy it. Or if we break out to all-time highs at 356, you can buy that and then look for an $8 move on top of that, which puts you at 364. Remember, earnings are at the end of the month. If Jay Powell passes the stress test tomorrow and Thursday on Capitol Hill with his testimony, if the CPI aligns with everything and the market doesn't go haywire and everything goes bullish, there's no reason why Facebook can't put on $8 in before earnings, because you can see here it's already put on $8. It went from 344 to 352 in just a couple of days. And so don't discount that. And like I say, don't be discouraged as a trader. You know, you miss this buy, you miss this buy, you miss this buy. Look ahead to the next opportunity, because breaking out to all-time highs out of a well-defined $8 trading range ain't all bad. Yeah, you would have liked to have it here, but people up at 364 will be saying, God, I wish I would have got that breakout at 356. You know, it was all-time high out of this range. man, I missed it. So there's always another opportunity. So always look ahead. Don't look behind it at what you could have made. Look ahead at what is the next objective level where you can participate. Apple, earnings end of the month like everything else. A little disappointing. We had a big pre-market move. They faded that. Came right back into support. I'm long Apple. But if we drop down below 144, just on short-term time frame, I don't want to see that happen. I would be exiting my position. And but if you're on a longer time frame, the daily, we had talked about this big breakout here. You can stay long. I think it's going higher, and I think you can stay long at least into earnings at the end of the month, unless you see some kind of, if the market wobbles here and you start seeing closes below 144, 143, 140, I'd close it out, especially if you got long at 128 way back when we said pull the trigger. So use those as your more or less your trailing stop. Tesla was the star of the show yesterday. Big move here, up 4%, up $30, right up here to this 690 level. And what you want to see if you're a Tesla bull is a breakout at 690, and that should take you up to 710, where there's a little touch of resistance. And if we go to the daily chart, you can see that there's a gap up there at 720. Actually, I think if you drill down, it's from 720 to 735. I think it's a $15 gap. But if you got long in here and you stayed tough through here, or if you bought that reclaim the other day, you're sitting pretty no matter how you look at it, especially if you can get this breakout above 690. And I don't have it on here, but I believe earnings are 720, so that's 8 days out. So you may get a run up here, and if it can fill that gap, the next really, really big level is 760. And if it can take out 760, then you got an open runway towards 890, to be honest. So even if you haven't participated and you want to take, a 2-week trade in Tesla, if you get a breakout here of 690, you can buy calls for either Friday or next week. Just be sure you're out for earnings. That's all I would say. You have no edge going into earnings. So if you get this breakout here, you'd be looking for 710 and then 720. And if the FOMO forces get behind it, you could be looking at a lot higher into earnings and, just 8 days away. So pay attention to that if you're interested in Tesla. Microsoft took the day off, just consolidating here along this line at 277. I wouldn't want to see price drop below 276, 275.50. Otherwise, you could come all the way back into this 272 area. And as we've been pointing out, we're at the top of the channel. That in and of itself is not bearish, because we can certainly pop the channel. But you draw the channels for a reason. Top of the channel, move to the bottom of the channel, bottom of the channel, top of the channel, top of the channel, bottom of the channel. And now we're back at the top. And, odds favor either a sideways movement or a pullback at least to the midpoint of the channel back here towards 272.50, and possibly even back here to the bottom. So those would be my primary scenarios, but price is above the 8-day, so it's hard to get too bearish. And if I was really, really long, I'd make sure that you took all this money to the bank, rolled up to even money, so that if there is a pullback from the top of the channel, all your money will have already been in the bank. Amazon took the day off like everything else. I think your level here is 37.25. If you can stay long against that, I think that's great. If you're looking to time an entry, we're getting a momentum reset right now after this big move. What's probably going to happen is this is going to build out a bull flag, and then it's going to break out of that flag and then take the second leg of this move. So flagpole, bull flag, breakout, probably heading to 4,000. We got earnings at the end of the month. And yeah, so watch for this bull cross here. Watch for this to maybe consolidate another day and then break out, and then you can grab it. Netflix, nothing wrong. Everything's still positive inside this $35 gap. I'm expecting this gap to fill up to 550. I would, right here in the middle, it's hard to take a position, but if you can be long against 532.50 or wait for the breakout at 542.50 and then look for the last $10 of that move. But everything's still fine. Just a little bit soggy yesterday, like a lot of them. Google had a nice day. We were down here yesterday at this 25.10 pivot point. We got this gap fill, and we got a run up to the top of the box here at 25.42. 25.40 it says. But, if we can get a pop here, then we'll be to all-time highs. And if you're not in, you can get long against that level and look for the next leg higher. So today I'll clean this up and I'll take this gap out. Technical mission accomplished. We got the gap fill, and now we're back up at the top of the box. All we got to do is have a push into earnings and pop this to all-time highs and push forward. And lastly, I want to go over SMH, the ETF that tracks semiconductors. Interesting price action. We had been in this consolidation. We broke out above 256, spent several days between 262 and 258, and then we dropped out of it and gapped down. But look at what happened. Little gap down here, filled. Gap here, filled. Gap here, filled. So in one fell swoop, over the course of that gap down and then the subsequent rise, we took care of a lot of technical unfinished business, and that is open gaps below. We had 3 of them on this run up. We created these open gaps here in purple. And whenever you got an open gap below, you can view that as unfinished business. Now, it could have easily broken out here and you'd have unfinished business that may last for months or even years, but it didn't happen. Price came down and repaired all these gaps and came up. And if you're part of our group, you got an email yesterday telling you that what was once bearish is now bullish because all this stuff got repaired and you recovered these levels from below. You could have, you could have bought anywhere in here, but very objectively, you could have bought this 256 on that reclaim and then certainly bought 258 here, which was the reclaim of this trading area. And then you could have bought at the end of the day, 259.50 or 260, which is the midpoint of this trading range, just like we showed on Facebook. But the real deal is this chart right here. We took this big $35 trading range. We had broken out. We went back into the range, which is never bullish, but we found support on the 50 and boomeranged right back out. So now the chart becomes bullish again. Why? Because although we dipped down below, we quickly recovered that level, and we recaptured 258 from below. So now I like semis long against 258 with the damage repaired, the open gaps below taken care of, and now we're back above. Bullish momentum, bullish RSI, bullishly stacked, pennies off the all-time high. I like it. Not a promise that it'll work, but a promise that it is very objective. So now you can stay long against 258, and if all stars align, we will find our ultimate measured move target of 295. Where does that come from? It comes from $35 wide consolidation added on to 260, ballparking it goes to 295. So that might take 6 months, it might take 3 months, it might never happen, but that's the technical target, and we've seen that play out quite a number of times just in the recent months. So anyways, let's wrap it up there. Let's see what the CPI print does and see where markets take us today. I hope you enjoyed the presentation, and if you haven't hit the subscribe button yet, please do so. Hit the alarm bell. You'll get all my content. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.